Hi, everybody. Today, we're going to talk about the policies that President Biden, Vice President Harris have shown support for that all of you should watch out for in order to start doing some planning. So I'm going to highlight a few big ones. Number one, the potential to eliminate favorable long-term capital gains tax rates. So you got to keep in mind when we sell stock over 365 days, if you hold the stock for more, then you get long-term capital gains, which is normally less than what you pay on your earnings of, your ordinary income. So you want to make sure from a tax planning perspective, we always like to, instead of selling short term, which is within 1 year, if you sell a stock within a year, it's considered ordinary income. So those are higher tax rates. If you wait longer than a year, that's called long term. And those are long-term capital gains rates, which are either 10 to 15%, depending on your tax threshold and your tax limits. So they're looking to potentially eliminate those lower tax rates on your stock, which is a big deal. For those of you who your households are making over 100,000, there could be an additional 4% income-based tax, or they call it a premium on households that make above that. I would say the number one biggest thing that all of you this is going to impact, including us, is the elimination of the step up in cost basis or tax basis. What do I mean by that? If you were to die and you left property or stock to your family, they're going to pay tax on the amount that you bought it for versus what they sell it for. Currently, if they inherit a property or they inherit a stock, there's very little tax to be paid. Under the new program, if they eliminate the step up in basis, a good example is if, let's say you leave behind a home, you bought it for 100,000, it's worth $1 million. Well, that $900,000 gain, your family will be taxed on that $900,000, where presently that's not the case. They get a step up in basis. So their cost basis is now the $1 million. It's not 100,000. So again, very little tax. It's going to be the biggest change to all households. Lower income, middle income, high income, doesn't matter. The step up in tax base, not just on property, remember on stock too. A lot of our clients are leaving the highly appreciated big blue chip stocks. They say, I'm never going to sell it because of taxes. Well, if that's going to change, their decisions are going to change on that front. Potentially lowering the estate tax exemption to $5.5 million. Right now it's 11 million. So if you have an estate worth more than 11 million as an individual, there's no estate tax when you die. They're looking to cut that in half to 5.5 million. So if your estate tax is above estate is above 5.5 million, now you're going to get taxed at 40 to 50%. They're also potentially looking to eliminate the QBI deduction for small business owners, which is the qualified business interest deduction. It's basically a deduction that was put in on the 2017 tax cuts that allows small businesses to get some of the tax cuts that those large corporations were benefiting from. If that goes away, small businesses that were doing well will get hurt and they will pay more taxes. Raising the corporate income tax rates, raising the highest federal income tax from 37% to 39.6, almost 40%. So these are some of the changes, high level. Again, it hasn't happened, but then Biden and Harris have shown support for. So again, there's certain things that are a part of our control and there's certain things that are out of our control. As my grandfather used to say, if it's out of your control, lock it up in a box and put it away and don't worry about it. But the things that we can control, which is doing proactive planning so that we put us in the best position to pay the least amount of taxes when these policies or if these policies get put in place, is what I encourage you all to do. Hopefully you got some great information on this Retirement Fingerprint Minute, and we look forward to next time.